Hey guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with integrity and transparency. Today we got two clips from Anthony Pompliano, or the desk of Anthony Pompliano, talking about the recent rally of gold against Bitcoin and kind of the crash of Bitcoin. But yeah, we got some interesting takes on it. So I'm gonna just play those clips and then give you my two Satoshis as usual.
To remember what that truly means. I recently sat down with Jeff Park, the CIO of ProCap BTC, and we were talking about gold and Bitcoin and the relationship between the two assets. We specifically were talking about why gold has run so much more than Bitcoin recently. And Jeff made a really interesting point. He called gold an altcoin for Bitcoin. It made me think a lot about it. Here's Jeff explaining what he means by that.
Bitcoin is growing and gold is siphoning some of the capital flows from Bitcoin into gold, central banks and all this stuff. But if you think about the opposite way, if gold is at $4,000 an ounce, imagine if Bitcoin didn't exist. It'd be at, I don't know, 10, right? Or so, something. Now, again, the market caps. And so maybe you'd say, oh, actually, it'll only be at 4,500 or whatever. But just like the fact that you have the fracturing, it's not just about the pure market cap of spot Bitcoin. You then also, on top of that, have the Bitcoin treasury companies. You have all of the private companies associated with Bitcoin where capital has gone to get exposure to Bitcoin indirectly. Like you start to like stack all this up and you're like, gold may actually be like $8,000 to $10,000 an ounce if Bitcoin didn't exist. What do you think?
All roads lead to Bitcoin, right? In my opinion. That's why people also have said, within the crypto VC industry, like altcoins have been, on the margin great because at some level, those who find success in altcoins eventually allocate some portion back to Bitcoin regardless. Wealth creation leads to Bitcoin as part of the denominator. And so in some sense, gold is also an altcoin in my opinion, because those who make money on gold, especially the young people, will eventually look to diversify and the correlation will not be perfect. And so if you made a ton of money in gold, you have the higher chance of winning allocation from that pocket of money to invest in Bitcoin than from NVIDIA or from French government bonds or anything else. So actually, that kind of diversification outside of gold is probably a pretty meaningful trend we'll see. That's why when Tether also launched the product for where there's performance dictated by Bitcoin and gold performance as one of the first products they're going to institutional investors with, that shows you already the interplay that's possible by kind of widening the mode of people to invest capital into a pool of asset where you're actually being kind of Trojan horse Bitcoin exposure.
Now, when you say
that is interesting, I never thought of it that way, but he's basically stating that after you generate wealth in an asset, then you're more likely to diversify into other assets, right? Like that's the traditional approach to things. Now, the question is like, who is actually investing in gold? Now, what I would argue is I don't know if it's the younger generation or not. I would assume they kind of skip the gold buying. I don't know, but it does have some credibility, some credence where if you make a bunch, gold kind of starts to retrace back down. You're like, okay, I'm gonna take some of these profits and roll it into something else. And that's where Bitcoin could come into play. I could definitely see that. And I know for like my parents, the boomer generation, they prefer to own, gold or gold stocks, and they're not going out on the risk curve. But as that generation moves on, then where does that wealth go? Well, it goes to the younger generation, myself. And then, what would I do if I had kids? How would I store their wealth? So it does have some credence, I think, when you zoom out far enough to see where it's going to go. To call it an altcoin of Bitcoin, I don't know. I guess that name has some sting, but it does kind of make sense a bit. Let's go into his next clip where he's talking about this recent drop in gold again.
All right, ladies and gentlemen, gold, the precious metal, it is on a generational run, and it's done something that almost no one predicted. Bloomberg's Eric Balchunas writes that GLD, the gold ETF, outperforming SPY, the S&P 500 ETF. The GLD is outperforming since it's launched in 2004, and it's mind-melting. That flies in the face of so much conventional wisdom, Eric says. Now, here's the thing. Gold is a non-productive asset. It's not supposed to drive yield. It's not supposed to have earnings. It's not supposed to outperform productive assets like stocks. Warren Buffett, one of the best investors in the world, he hates gold. He's not a fan at all. He doesn't like the fact that it doesn't produce earnings, yield, or dividends. And so why is it that GLD since 2004 is outperforming stocks? Well, probably because monetary policy has completely lost its mind. It's undisciplined, we continue to debase the currency, and gold, something that produces no earnings, but continues to protect purchasing power. That's the thing that investors want, and that's why gold is outperforming stocks over the last 21 years or so.
And definitely most recently in the last year. So I still subscribe to that Jack Mallers narrative of you have to debase the dollar, and debase the dollar against what? And that is going against gold. So I believe this is 100% the Trump playbook, and that if you are going to win at the end of this, like The end being the inevitable collapse of fiat currency, be it a reset in the system or be it moving to something else, i.e. central bank digital currencies and digital IDs. I don't know. But the point is it comes to an end regardless. And the only way to escape that detrimental off a cliff nosedive is to be in hard assets, and hard assets being things the government cannot print, and preferably things the government cannot print and or seize. Now, granted, we have seen the government seize Bitcoin from that pig butchering scam in Cambodia, but they cannot get the keys from your head if you don't share them. And I believe this is also where loans, especially DeFi loans in Bitcoin, become even more important. So like right now, I'm still using Morpho. Don't completely trust Coinbase, but the premise, the thesis. So think about this. I can buy Bitcoin. Yes, I'm KYC'd on Coinbase. I'm doing DCA, so I'm buying Bitcoin. But once that Bitcoin goes on to Coinbase, let's say it was actually another decentralized exchange that was not tied to Coinbase, I could basically move that from Coinbase to my own cold storage, and then from that cold storage to a decentralized borrow and lending platform, get stable coins in it, use those stable coins to live my daily life or whatever. Now, granted, there's also currently KYC with things like Spritz, but those stable coins, I could then pay for my daily bills, like me using a credit card every month and then paying that balance off. So there is a loop or a pathway where you do not have to touch a bank at all, and an eventual pathway where I believe you are not KYC'd or, having to give up your firstborn and all this other mess. So there is a place for that. It's not completely here yet, but I say all that to say that Bitcoin and gold are those two assets that you can hold and benefit from the debasement, whereas gold can be seized. It has been before, and it's very hard to self-custody. As Michael Saylor said in that other video interview, central banks, governments, nation states could figure out how to self-custody it. So TLDR, to me, the writing is on the wall that this is the best opportunity, and not only being the best opportunity to get into Bitcoin, but as we'll see in this article that I'm pulling up now, there's still so many people that don't understand Bitcoin and have it wrong. Like, I don't know the number of people that subscribe to Yahoo Finance that read this or anything like that, but this is coming from Yahoo Finance. And to me, it is clear they still don't get it. So this is a hit piece done against BTC. So gold prices climbed to another record high, extending the October rally that has made the precious metal the first asset in history to reach 30 trillion. At the same time, Bitcoin, often dubbed digital gold, continued its decline, dropping more than 5%. So this one actually is, I think, bullish, or at least, what would you call it, neutral. So they're talking about the queues that were forming. I think this is in Vietnam somewhere. Let's replay this, see if it'll. So just people lined up outside going to get physical gold. And not gonna lie, like this whole, whenever things get to this euphoria phase, that is when you start talking to your family and friends and everybody starts to go do it. So I did mention to my mom, because she's not very risk averse, about, actually I mentioned when Trump was running for president, I was like, if this man makes it, then you need to look at stocks, real estate, and gold. Try to get into Bitcoin, but she doesn't understand tech, so that didn't work. That doesn't work. So I've been talking about this since the beginning of this year. Gold is now up 65%, but literally on our family chat that we do every week on Sundays, I'm always saying, hey, check the price of gold, check the price of gold. So she's moving now towards, I'm gonna go buy some, but she'll literally be one of those people that end up buying it at the top because of things like this. So usually when you see stuff like this, like the story I'm bringing up with my mom, that is a typical top signal, and it's going to probably trade back down. But the article I want to bring up is the one that said that's more of a negative piece on it. Here we go. October 10th, So Mohammed Shahid, October 10th, tragedy. The day Bitcoin's digital gold myth went up in smoke. October 10th will go down as the day Bitcoin failed its digital gold exam. Wall Street bled out, NASDAQ and the S&P 500 dropped more than 3%, while Bitcoin lost over 10,000 in value within minutes. Gold did exactly what a safe haven is supposed to do, hold the line, while Bitcoin calmly absorbed crypto. It didn't hedge the chaos, it became the chaos. So this whole, kind of a hit piece about how garbage Bitcoin is and gold is better. So I say all that to say that we're still early. So regardless of what gold does, regardless of what Bitcoin does in the short term, the eventual outcome of this entire fiat Ponzi scheme is that fiat fails. There is going to be a new global reserve currency, be it one that they create to wipe the slate clean, or be it kicking the digital dollar down the road with stable coins, or be it a bifurcation with gold, Bitcoin, and whatever else gets created out there. It doesn't matter. Regardless of any of those outcomes, staying humble, stacking sats is the only way that you can prevail and thrive, actually, in the long run. All right, smash that HBO special, help brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible.